Hi, the purpose of this video is to talk about whether or not it's worth it for you to shop around for a mortgage. The Consumer Financial Protection Bureau seems to think it's a big problem because about half of Americans do not shop for a mortgage and they're losing billions and billions of dollars according to the government. So I thought I would do a mathematical comparison for you to kind of see and narrow it down. It's like, well, if I spend that extra hour, a couple hours, how much money is it going to be worth it to me to do that? So here goes. Let's just jump right into the math. Let's say, and I'll give you a couple different examples so you can compare, like if it's a bigger mortgage or smaller mortgage. But let's just say we start out with a $300,000 mortgage, and let's say that we can get a 0.5%, which is not that uncommon, difference between the rate that someone who didn't shop and just went to the first mortgage company they found versus if they had shopped, they might have found that 0.5 point lower. Okay, and I'm doing this with all else being equal. So the 0.5 point lower, all else being equal. But the math on that is 300,000 times 0.5% is $1,500 a year. Okay, so if someone's going to stay in the house for 20 years, well, there's $30,000 right there that they're overpaying the whole entire time they're in the house. Okay, so now let's just say your mortgage is half that amount. So if you had a $150,000 mortgage, well, then that would be, in that example, that would be $15,000 over that same period of time. So you can kind of see a little bit on the rate, how a rate can affect you. And again, you can tweak that yourself and you can decide, well, what if the rate was only a 1/4 point difference? Well, again, in my first example, okay, everything else being the same, that $30,000, cut that in half, now it's $15,000 over that period of time. So hopefully you can see that there's a little bit of money there involved, and it can be, whether it's $1,500 a year or $750 a year in my example, it's actually real money. And then I didn't even talk about the closing costs, but let's talk about if you can get a great rate and if you can get low closing costs as well. Well, the closing costs typically, and this is just an example in Northeast Indiana or Fort Wayne, Indiana, for example, the conventional loan closing costs could be anywhere conservatively from $1,500 to $2,500 or even more. But let's just say that was $1,500 to $2,500 is a good estimate. But what if you could get that same exact closing costs on a refinance, let's say, for only $149 plus recording fee? So it's called about $200. Yeah, I said 200, not 2,000. 200, not 3,000. So yeah, that's a tremendous So right out of the gate, right up front, we're talking about, geez, $1,800 to $2,800 in savings. So that there's a tremendous shot right there. And on a purchase, by the way, instead of paying $2,000 or $3,000, you could pay about $450 plus recording fee. So let's call it $500, $550. So that would be, again, a nice savings right up front. And then you get those annual savings we talked about. So in order to compare to see if it's worth it to you, those numbers kind of sound like, okay, a couple grand up front, we got a couple grand or 1,500 or whatever the number is going forward every year. People tend not to think in terms of time, but it is a factor, a very powerful factor, as Albert Einstein was said to have asked the question or answered the question, what's the most powerful physical force in the universe? And his answer was compound interest. So it's a powerful force. And that's because it involves time. But let's get back to how much money you make to see if, in fact, these numbers even mean anything to you. So if you make $100,000 a year, let's say, for example, let's divide that by 50 weeks. So you make $2,000 a week, okay? If you make $50,000 divided by 50 weeks, you make $1,000 a week. Well, you take that $2,000 a week, for example, and I just told you right up front, we could save you on closing cost. I say we, I mean you could go out and find, if you shopped properly, you could find the Great Rates Low Closing Cost model because it's out there. You could save 1 week's worth of work right up front. So that'd be like a whole week's worth of work that you just throw away, don't get paid for, if you didn't find the low closing cost. Okay? And again, same thing with if you make $50,000 a year, now that's like 2 weeks worth of work you're not going to get paid for because you didn't shop around. So I don't know. I don't know if that helps you visualize or see at all whether or not you should shop around for a mortgage. But what I would say is if you're interested and you want to know about the Great Rates Low Closing Cost business model, I would go to the website, which is Great Rates Low Closing Cost Mortgage.com. And you can click on some links. You can get our contact information. You definitely should get the free report. Ask for the free report, which is the #1 mortgage mistake that people make. And then I'll be happy to answer any questions for you and see if we can't save you some money. This video is ended. Go forth and save money on your mortgage.